Good morning, everyone. I'm Catherine Ross with TheStreet. I'm here with Jim Cramer on the floor of the NYSE. Jim, how are you?
Catherine, I'm sanguine. I like a down opening. I want to shake out these people who don't want to be in the market. Remember, I said that when you have the oscillator being -5, you tend to get at least 3-4% rally above what we had. Of course, we didn't anticipate the president really taking a shot at the stock market by talking about how there's really no hope, basically, to keep the tariffs down. We would have rallied strongly today if that weren't the case. We've got two major forces. Clarida maybe backing down a little bit from the Fed, so maybe the Fed won't be our public enemy number one. It shifts to trade and tariffs. So we keep playing this ping pong game with things that are bearish, and we can't. One of the paws nails us every single day.
You were tweeting a lot last night and this morning about Apple and the tariffs. Can you explain that?
Well, because, look, what do you do if you're Apple? Okay, Apple is a huge job creator. Apple has got a fund that creates a gigantic amount of jobs in this country. Apple's deeply committed to this country. Apple is a major employer in this country. But they also make iPhones in China, and they're a huge. China's an inexpensive place to make things, and they sell a lot of in China. Now you could say, well, listen, they shouldn't make anything in China. They should make it all in Vietnam. But they got a big supply chain, and they do a good job. And I question the president's decision, if he does it, to put a 10 or 25% tariff, 10%, because the people can afford it. Because how does he know if they can afford it? That seems to be ill-advised. But I really think Apple has special status, and it's being eroded by a president who simply doesn't understand the value that company brings to our country.
I also want to ask you about Salesforce Earnings. We're going to go more into this on our Action Alerts Plus video, but I want to get a quick look at it.
Well, look, I think that Mark is doing very well. One of the things we learned from the retail numbers is that you can do very well and it doesn't mean anything. So my biggest fear is he does well, and then we stand here tomorrow and say, I guess it wasn't well enough. And the answer isn't that it wasn't well enough. It's the answer we're in a bear market. And in a bear market, what happens, just so we understand, there are cyclical bear markets and there are bear markets that are based on a systemic risk. This is cyclical. Stocks went up, people paying too much for them. In a cyclical bear market, what happens is PEs contract. So you pay less for good earnings. And that's what I fear for Salesforce. I think the PE is contracting, but it's a great company.
Yesterday was Cyber Monday, and
Right.
I just got the final numbers from Adobe Analytics in my inbox, and they said that a record number of sales were made online, 7.9 billion. And something that I really want to point out to you is that 54% of that was made on our mobile devices. Is that surprising?
I think it's really amazing because it shows you once again the secular shift is just so rapid. Brick and mortar really didn't have any increase at all. The bargains that are on Amazon, Walmart site, whatever, are too compelling. When it's handheld, that's millennials because older people would not buy these things on their cell phone. It's cheery. It's the type of thing that I'm giving a talk on Thursday, Deal Economy, and I say, you know what, we wanted a weaker Christmas. And the same way we wanted Greg Hayes this morning to talk about how we don't want rate hikes, but we didn't get that, and I am concerned that the president will antagonize the Fed even further and make it so it's hard for them to do one and wait, which is what I want. Jay Powell's under enough pressure because those numbers are good. But remember, Amazon and Walmart are bringing prices down. So you may think when you hear that it's inflationary, but the combination of a strong offering online from Walmart, where 160 million people shop, by the way, and a strong offering from Amazon is lowering prices. And that's what the Fed should focus on. Digitization is lowering prices, not increasing them.
I have an Ask Jim for you. And this is about our stock of the day, which is Apple. Mm-hmm. And Dirk is wondering if Apple's still a buy. Now, he has shares of Apple. He's been listening to you for years.
I'm going to tell Dirk that until we get, look, this is 12 times earnings, and it's where Warren Buffett bought stock. Until we get convincing downgrades, there's still too many analysts that like it, it's hard to form a bottom, particularly after what the president did. I actually think that a bottom could have happened if the president hadn't interjected himself into the debate. So now you have a you have G20 problem, and you need to see some analysts panic and say, listen, you got to sell the stock, and we don't have that yet.
So I'm looking at the Dow. We're down about 185.
Yeah.
We hit 210 earlier.
We're up a lot yesterday.
And you were right. You said this on the video, which was that we are in a bounce. But looking towards the end of the week, what do you think?
Well, I think that one of the things that tends to happen is that people get bullish on these events these days. They used to get bearish ahead of a big bad event. Now we get bullish, so I want people to be very careful. We're trimming a little fraction alerts. We have some stocks that are bouncing, and we just want to have a little extra cash just again. That'll take us up to actually a very large position relatively, so that if both G20 and Fed say the wrong thing, we'll be ready. If they say the right thing, we'll do fine. I'd like to be a little more concerned, as I have a piece in Real Money today, about the risk and a little less about the reward. It's a long piece, but I really want people to read it. I didn't embargo it specifically because I want people to read the piece.
I'll put a link in there for everyone
Please
who's
do.
curious
Thank you.
about reading it. And my last question for you today, Jim, is going into 2019 and beyond, especially when we're seeing down days like today and bounces like yesterday, what should millennial investors or just new investors in general be thinking?
Well, I think that what you want to think about, and this is important for millennials, is that you want it to go down so you can you should always be contributing to IRA, 401k, and what I want you to do, I like to do it year end, but if there's something that happens before year end that's really bad, I commit money then. Because remember, if you take a look at the long period where I got involved, when the Dow was 1,000, if you bought on all the big dips, you really did well. Now, I'm not saying dip buying is right for this market to be able to come back. That ended. The dip buyers they've been annihilated. But what I am saying is that if you get a price break and you're investing for 30, 40 years, it's a good opportunity. Put a little more money to work than you would normally.
All right, Jim, thank you so much for your...
You didn't
Oh, wait, yeah. Okay, so you guys got to see this. He's got a rip right here.
Yeah, well, that is because I worked out this morning with Jim, also known as Buck, my trainer, at 4 o'clock. And I guess it's just, what can I tell you? It's never too late to get to, Strauss Zelnick has a six-pack. Well, let me show you something, Strauss. Take two.
See that?
See, Strauss? You're not the only one.
All right, Jim, thanks for your insight. And, I think you need to tone down your workouts.
Yeah, maybe so. It's just to see you.
All right, guys, thanks for joining us. I'm Catherine Ross of TheStreet. We'll see you guys tomorrow.